Hi, welcome to the Market Alert for Tuesday the 10th of October 2017. So yesterday in the pound, nothing really happened for the first part of the session, then eventually the market broke out and moved to the upside there, before then moving back down. So again, it was Columbus Day yesterday in the US, even though the main markets were open, the bond markets were closed. And in the daily chart, we've got a bit of support coming in the market, finding this down at the 130.32 level, and it's been moving higher since. And what I would be inclined to do here, let's go to markup, get the 0% there. We've got these two areas that need to be taken out, in particular this one. Because this is a down day, but there was no selling. There's certainly some buying pressure here because the volume's greater in this bar than the previous bar, and again you can see that the range is narrower, so there's definitely some buying pressure around there. News wise today, what have we got? Let's have a quick look. Trade balance is out, manufacturing production for the UK, that's the only high impact news item today. We've got Ecofin meeting, whatever that is, no idea, it's obviously something that's to do with the Eurozone, and then Kashkar is out at 3 PM, which should boost the Dow and send it to new all-time highs. We just have a quick look at that in the daily chart. You'll see the market is just remove this one because we've got a new all-time high in there. Let me just add this one in. There we go. We were at 22,800 for this market now. No doubt this will be taken out today because we're in a major phase of euphoria and also greed. I mean, this move to the upside here is what would be deemed as parabolic, tulip mania type thing. I mean, we can see the market just has not stopped, but certainly this last phase, I say the last phase, I mean there's got to be some pullback at some point, unless pullbacks are also a thing of the past like bear markets, but we'll see. So there's a chance of a new all-time high. Yesterday, well, the market was just very quiet, and it became even more quiet as we thought it would, as it was again Columbus Day. And I mean, this part of the session here, these are 2 to 3 point moves over 5 minutes. That's how quiet it became later on. So there was no point in sending a note out because you could see from the off there was just no volatility whatsoever there for this market. And a quick look at the implied volatility. There's an interesting picture going on here at the moment. We've gone from 738 to 761, even though the market was sideways and quiet. We noted this over the last few days actually, where the market is starting to pick up with regards to volatility, which is interesting. Let's see what happens today if the market does break through to new highs, if the volatility comes back to the normal relationship of actually moving lower as the underlying market moves higher. And just before we finish, here's a couple of great news items to back up what I've been saying since January as well. And here we can see that we've got the 5 biggest bubbles in the market today. This is something that I talked about in a video way back in January about the 5 major bubbles. What's been added into this is the cryptocurrencies as well. But as it says here, we have all of the classic warning signs of a big market up, and yet people are mostly ignoring them, and that's true without a doubt. And then also the Dutch Central Bank, they've come out and warns of calm before the storm. The picture resembles that of the period before the financial crisis, and it certainly does as well. There's no doubts about that. There's a sense about it, and as I've mentioned before, I believe that by the time we get to October, we may have a significant increase in volatility, and it'll look completely different to the beginning. I'm not saying it's going to crash, but it's got to pick up at some point. And then also here you've got Macquarie investors are mentally exhausted because they understand there is nothing normal in this market. Well, certainly Friday was a perfect example of nothing is normal in this market after the non-farm payroll figures came in at minus 33,000. They're blaming the recent weather events, the hurricanes, for this, but I'm not buying that whatsoever, and that's the reason and the rationale for the market staying on the highs. I will just discard this one. It's a one-off. It doesn't matter. It's we've had hurricanes and people have been made redundant and lost their jobs. Not that quickly, because these are calculated on the previous month's employment figures, which is something that they're overlooking in this BS that they're actually putting out about it. Right, that will do it for today. It's Tuesday. It could be fairly quiet, but can it get any quieter than it has done for the last couple of days? Check the pre-market session before 2:30 to see how the market's traded, see what the range is like. If it's been sideways, then we can expect more of the same. Nothing we can do about it. It's just the way the market is at the moment. Right, that will do it for this one. And if there's anything to report on, I will do. Other than that, as ever, thanks for watching. See you in the next one.